we would expect corporate earnings to continue. I also heard you talk about specific company news. So those are going to be the two drivers. How are specific companies responding in this environment? And the environment is a very positive one for stocks.
Yeah, how positive is it? Because we're supposed to buy stocks now, Mark, not for what has happened, but for what is going to happen. So it's great that earnings were good last quarter. What do you think is going to happen in the quarters to come?
Well, I think earnings are going to continue to be strong. The effect of the tax cuts here in the U.S. has not yet been fully absorbed. So we have these strong underlying fundamentals. But if that was truly the case, you would see the stock market soaring this year, when in reality it's been chugging along and up only slightly. And that's because this tariff and tweet risk. The tariffs, tweets, and now testosterone with these leaders all talking tough, that's what's creating the overhang in the market. And if that could go away, we'd clear the runway for the good economic news that we continue to hear and we continue to expect.
You think if the president puts down the phone, the market goes up?
Well, it could, and he might have to walk back some of what he said. None of these leaders want to be perceived as weak to Trump. We're getting into a game of KS mas macho, whether it's Trudeau or the French minister over the weekend, Le Maire, and with China. Nobody wants to look like they're Trump's whipping boy and agreeing to these new U.S. tariffs unilaterally. If we tone that down and we clear the runway for earnings reports and let the global economic growth contribute to the stock market rally and pick up where we were in 2017, it's a totally different story.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.